Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. My first thought is that you need to figure out what your goals are. How long do you plan to keep your investments? My big idea is that this space will grow from, say, $2.5 trillion now to, say, $10 to $15 trillion at the end of this cycle, based on how big this cycle is, and then to, say, $100 trillion by 2032. The biggest macro trend that has ever made people rich is still in front of us. It was very profitable in the beginning, but it's still very profitable now. We don't want to mess this up. That's what we want to record. TradingView data showed how volatile the Bitcoin price was during the Wall Street trade session the day before. This caused prices to rise to a high point in the area of $67,200, but soon sellers took over and Bitcoin fell to $64,500. The $67,000 range is important for figuring out how much ongoing absorption there is, since lower prices often cause price bleeding skew. Analysts thought that the recent lows were normal and pointed out that spot premiums are low, which is reflected in funding rates across markets. Monitoring Resource Coin-last data showed that the amount of money that could be used on BTC pairs changed over time. According to the platform's updates for ex-subscribers, funding rates went slightly positive after the most recent lows. This shows a bullish buy-the-dip sentiment. At the same time, another well-known trader called Credible Crypto pointed out a great place to buy BTC, starting at around $63,500, but there were different odds that buyers would be able to get this price. Credible Crypto said that prices could technically drop into this zone, but it wouldn't be strange to see the zone front run. They told their followers to keep an eye out for a low time frame impulse move. This area lined up with a key bull market support trend line. Analysts are now paying attention to it, and Checkmate, the lead on-chain expert at Glassnode, is one of them. He said that the short-term buyer realized price was $63,750 and warned people not to be too scared of Bitcoin price changes when they see big unrealized losses. An explanation chart he showed him seemed to back up his claim that things could get worse, but they hadn't quite hit that point yet. As we all know, crypto is very cyclical. This everything code theory that I've built says that there's a debt refinancing cycle that happens every 4 years. This is because in 2008, everyone lowered their interest rates to zero, and the government then took on all of its debts. And it's made this never-ending circle, which is the same as the cycle of Bitcoin halves and US presidential elections. So we have these cycles, and out of the 3 years, crypto is the best performing asset in the world. Year 1 is crypto spring, year 2 is crypto summer, and year 3 is crypto fall. Along with macro spring, summer, and fall, year 4 is the worst, and people want to know how to deal with this. We don't know what the cycle peak will look like, so this is the road I think most people should take. I might even take it myself this time. We're not sure exactly when it will be. We do know that ending this year would be crazy early. After the US election, there's usually a huge surge in the second half of the year that lasts until the end of the year. That means you should think about time instead of price, and maybe take a third off the table for lifestyle chips. Now that you have some extra money, you should be able to buy a car, a house, or something else. Get your money out of crypto land and into the real world where you live. This will help you protect your lifestyle and the things that are important to you. Okay, you've taken away all the stress now. There was no price change, you did it by time. So near the end of the year, I'll take a third off. The price will go up a lot, so I don't care what it is. So I'm just going to take it off. Now that my life is less at risk, I can run 2025 smarter. Then in 2025, you can run with the last 2/3 of your money and say, okay, I'm going to take some time off around the summer. If I want to take more time off, you might as well just run the rest, since you've already made your life less dangerous. That's the best way to do it. On the other hand, if we do get a huge pump between 2013 and 2017, I would probably take another third off. It doesn't matter if it doesn't grow and gets stuck. You've saved your lifestyle and cut your costs by a third. With that money, you can buy something. You can buy the dip with that money or use it for living chips, as I already said. But now you're ready in case it ends early. You're still in the game, even though you've taken your money off the table. The long-term trend is to be in the game. That's what I care about most. You take a little more off if it really goes crazy, though. You can also put it in the bank of living chips. After that, you still have a job. Because I believe that if you don't have a place in the secular market, you end up making choices that aren't the best for you. You might not say a third now. It could be 50% for you. It doesn't matter. To give you an idea of what I mean, don't try to nail the top. Instead, think about time zones and how much lifestyle chips lower the risk in your life. I don't want to mess up this trend because I think it's too important. That's the best advice I can give. This time, I think I'll use the third off approach because I want to change some things about my life. I didn't do that last time, and it made me very happy to do nothing but buy the dip. I will buy the drop in 2026 for sure, since this trend isn't going away. Keep in mind that 2.5 trillion, 10 to 15 trillion, or 15 trillion is the pump, and 10 trillion should be standard. That is the game we are having. The circle should be your friend. Do not forget that there are times of the year that can help you. We are now making the change. And I'm talking to you right now, on May 12th, while I record this. Just now we're making the change from spring to summer to crypto summer. Usually this happens in June or July, and then things go crazy. There will be corrections, and they will be sharp. Corrections of up to 40% are possible, but from here it generally goes up into the banana zone,